Inside out trading means looking at the market generated information first and using market generated information only to arrive at your trading decisions. Now, to do this means you don't have to look at exogenous factors like news, events, related markets, and results of companies, and fundamental information, and all those things that are not directly related to the price movement. Directly, when I say directly, it means indirectly it can affect. Bad results will definitely bring the prices of a stock down, but at the end of the day, it is the buying and the selling by the traders that will decide where the price of the stock will go, and that is what I mean by market generated information. So using only that to arrive at your decision is called as inside out trading. And the tools I use for this is market profile, I use order flow, and I use VSA. All these three tools, they look inside the markets first and then they move outside to find good trading opportunities. All right, let's start with this chart. First and foremost, this was the 15th of November, and what you could see on this chart is very simple. You had nice value developing earlier in the day. Though it was a gap down, markets did not extend the range lower in the first trading half of the day. But then later what happens is we start moving lower. Now, as we start moving lower, you can see one thing for clear is that the highest volume was being attached at the higher part of the profile. And as we moved lower, we could never match this volume. Neither we could spend as much time as we did in the first half later in the day. So what essentially was happening was prices were moving away from this developing value area, and they were not dragging the value down. Essentially it means is that we were moving too far too quickly away from the value area. Value is where agreement is, value is where the smart money is. And whenever the prices are moving away from value area and they are not bringing the value area with them, uh, bringing the acceptance with them, then it means that the smart money are not interested in that direction. So what happens here is that we form a value higher in comparison to the later prices. Then the later in the day prices went down, but they could not drag the point of control or the value with it. And that was the sign that the smart money was now not interested in lower prices. And then what happens is on the second day, the subsequent day on the 16th, we open a little bit higher as compared to yesterday's close. So the 15th closed here. So we opened higher, we went higher. This was a classic Q shape as I have marked it on the chart. And the HVN was the target for a snapback rally that often ensues after a Q shape. Then what happens is usually when you have a Q shape, this HVN of the Q shape or the highest volume node acts as a resistance, and it was at 10,190. We came into that, but we could not find any follow through. Prices did find some resistance at this level as expected, but then if the selling was coming in, why the prices were not moving lower was an important question to be asked. And the reason for that was buyers, the smart money buyers, who were not interested in these lower prices, as we saw from this particular profile shape or structure from prior day, were not interested in lower prices today also. And all those momentum traders who saw this as an opportunity to sell, they looked at this as a pullback in a strong downtrend, which indeed was strong. They were selling, but at the same time, the smart money was absorbing all the supply. And what happens subsequently is we break out from this reference. And the next target, of course, is the next HVN higher, and that came around 245. And if we could have found acceptance above that, we were going to target 305, which is this HVN. So, we had this trading plan set. We saw that there was some acceptance and absorption of supply. and that meant likely higher prices in the near future. This is how we look at the market generated information and then come up with scenarios as to what may happen, and if that is not happening, then why we are not getting the expected response or behavior by the markets, and looking at alternative possibilities. So that is how you generate a trade using market profile or auction market theory principles. And now comes the time when you, once you have set up a trade, you have some logic behind your trade setup, you go into timing of that trade. So let us move on to that. And now we come to an order flow chart for the 16th, and now we will see were there any signs that would have given us any advance intimation as to the likely up move later in the day. So we did have, as you can see, this is the early part of the day. Let me mark that up to this point. And what you could see is all these green boxes are drawn around red or deep red prints. So you can see a lot of red here, a lot of red here. Again, this is a red box. Again, this is a red box. Again, here and here you have red boxes with big numbers inside them, deep red colors. Now, all that signify is that selling was heavy in this zone. Now, this was the selling done by momentum buyers. And how do we find out? We find out by looking at the follow through to this selling. If this selling was by the smart money, prices should have immediately moved low. But that did not happen. What happened instead was prices went on making higher lows. And why was that? Because the selling was done by the momentum traders, not the strongest of the lot. And the smart money was actually taking the other side of that selling. So aggressive selling showing up on the order flow chart, but prices not following through, because all the buy orders on the other side of these aggressive sell orders were of the smart money, and they bought all they could, all the supply that came in they absorbed. And look at the follow through. As soon as these momentum traders realized that their selling is not taking any effect, they panicked and they started covering. And as soon as they started covering, prices started moving higher. So all these deep red prints not giving you any follow through was kind of an indication that we have higher prices on our hands. And a long trade placed in any of these bars could have given you nice reward for your trade. Now, this is how order flow chart works. And there are, of course, specific setups that I use in this chart to place the trades. But once again, the time is short. I just wanted to show you how the inside out trading works, how you first set up a trade and then you go for timing that trade. Okay, let's move on to the VSA chart now and see if it can give us any indication. And surely it does. This was the prior day, the 15th, and you can see this is the nice HVN which we talked about. Then the price moving away from HVN, but the volume was lower as compared to this HVN, and that was the sign that the smart money was not following through. Then what happens is more interesting. The next day we open higher just below this HVN, which we pegged as a resistance, and surely you get signs of weakness, these red arrows and triangles around this important resistance. But just look at what is happening here. You saw at the left top of the chart lot of red signals, and then the price followed through. Again, here you have a red signal, you cannot see it clearly, but then the price followed through. But here you had multiple sell signals or signs of weaknesses, but the price making higher lows. Also, if you are a keen observer, you will observe that the price for most part was trading above the volume weighted average price. So that is another sign that tells us that the buyers are in control of the auction. Even though you are getting selling, that is most probably the momentum sellers, and they won't be able to push the price down. And indeed, once all the selling subsided, it was absorbed by the smart money. You see this nice breakout happening, and obviously we had that 245 target mark, so we were heading that way, and then we had 305 above that. So uh, it's not always that you get a signal and then you take a position in the direction of that signal. You see a lot of green signals here, but the price just kept going down. So here you see signals coming in from the sell side, but at the same time, you're not getting any follow through. The market profile chart made it amply clear that there was some absorption of supply. Order flow chart showed a lot of trapped sellers in this zone, and all this, when you combine, you come to a clear picture of what exactly is happening in the markets, and then subsequently you know that what the price is most likely to do and which side the risk is the least. So in the light of all this evidence, the risk was least for a long trade or a buy trade, and that is what you should have done. All right, now let me just show you quickly what the trade did later. And surely enough, it did hit our target of 245. And if you are watching the market on the subsequent day, we just capped up and tagged 305 right away. What the markets did on this day was they basically broke out from 190. So if you were a keen trader and you were keeping an eye on this level and looking at the market development as it was happening, looking at the structure of the prior days, and then monitoring the HVNs as to where you can get likely supply and resistances, and you were really well placed for this long trade. What happens is, if you take a long around 190, you could have tagged 245. This is a futures chart, so that's around 55 points. So even if you take a 50 out of it, you know that you stand to make around 3750 bucks on a single lot of Nifty. It's not bad for 1.5 hours of work, because as soon as it broke out on the E period, it immediately tagged in the third period, that is the G. So each is a 30-minute period. So in 90 minutes, you could have made this nice sum of 3750 per lot. It's so clear on these market profile charts, and so I would not say easy. I would not say easy, but it's so simple. If you could just monitor all these principles developing on a real-time chart, you could take positions. You could use order flow charts and VSA charts to assist you in timing your trades, and of course then you can reap these great rewards. All right, so that's all I wanted to share. I thank you for listening to this small presentation. I hope you liked it. If you really liked it, then don't hesitate to share and like the video. Leave us a nice comment as to what you think about inside out trading. Just let me know how have you understood this, how you are going to use it in your trading. And if you have any doubts or queries about this, you can always ask your questions in the comments below. And last but not the least, don't forget to subscribe to our channel, and then you'll be receiving all these cool updates as and when I post them. And if you just go through our channel, you'll find that I am very regular at posting these videos on YouTube for you guys only. So thank you for listening to this presentation, and we'll meet soon.